So the 10-year has been on the move and doing some really interesting things when you look at price, time, and momentum action, which is what I use to boost my trading, Hema Ready, and that of my trading tribes. Now, I did an update on this market on October 4th, which was obviously before the atrocities in Israel began to unfold. And I want to set that issue aside for a moment to bring your attention to the fact that our charts, our markets, while fundamental factors, to say the least, influence the moves strongly, those technical ways we measure them can still apply, even in terrible, volatile times like this. So let's start with this monthly chart of the ticker TNX.X, all right? It's based on the 10 times the yield to maturity of the most recently auctioned 10-year Treasury note. And the way that it's priced, you can just divide by 10 to get the interest rate amount. So for example, 46.29, you just move the decimal over to the left, and that would be 4.629 on the 10-year. Got it? Okay. Now, the three resistance levels you see here. Now, I say resistance with air quotes because resistance on the yield chart is just on the chart, okay? These prices are always relative to what's happening in the futures first. Well, these three quote-unquote resistance levels I shared on October 4th, and you can see that we came up and pierced 48.74 briefly. So I'm just going to change that to a dashed line and started backing off. So monthly levels from way back can be extremely useful when you are in a recovery on a chart, okay? Now I still have two levels out at 50.95 and 53.16, but I want to show you on the daily chart how the market timing and momentum have been playing into the action. So I'm going to just switch to a daily chart that I've already lined up that shows, again, the date, October 4th, that I did an update. And I had at that time shared those resistance levels, as I mentioned, and I also shared a forecast for the 10-year. So this was for October 16th to be trading about this price. I said in that video, and you can find the links to it in the comments below, that we were likely to trade higher into 48.74 on this TNX.X chart. Now, I personally thought that we'd keep going higher into 50.95, but what actually unfolded in between was a bearish pattern between price action, so the chart of the 10-year, and the momentum. This is my favorite momentum indicator, the RSI power zones. So that was a clue to stay out of the way, and if you weren't in any sort of play that was counting on rising interest rates, this was not the time to enter a new one, okay? We then have this little hash mark here that represents the SIFMA holiday, so the bank bond market holiday for Columbus Day on October 9th, and then the yield started falling. Now, they rose real strong on Thursday. This was in part due to a really crappy auction of the 30-year bond. There's also been inflation data going around this week. I want to keep those factors aside because, again, I know there's a lot swirling the markets, guys. But my point to you is look at how before the inflation data, before the holiday, and before the terrible things going on in Israel started to occur, this forecast was out there on this chart. And I even said in that video on October 4th that we might rise up, and then if we do get some choppiness, this forecast can still act as a magnet on price. Can you see how useful that would have been to be paying attention to this intersection of these purple lines, despite all the drama going on in the markets in the world? Okay, these are the ways that you will be armed to help navigate your trading during these volatile times. So where do we go from here? What is likely to unfold? Well, obviously, I cannot predict what's going to happen on the weekend globally on that front, but I will look at the fact that we are so close to that magnet that I do think that in Monday's session, we're likely to see the 10-year trade in this intersection, all right? And again, the techniques to how I do these forecasts, I teach in my loss forecasting trading system. Now from there, because of my RSI power zones relieving themselves of overbought conditions and journeying back towards the bull support power zone, I think there's a decent chance for the yield chart to form a tradable low, okay? A bar low, a lower bar low, and then a higher bar low in the vicinity of this October 16th date. It could be a day earlier, a day later. In my loss forecasting system, I teach the nuances around how to account for the forecast if it's not hit on the nose. So in this case, the forecast was originally overshot, but then we started to see it get pulled back again, like that magnet pulling on the chart action. Let's look at some updated resistance and support levels before we wrap up. So I'm going to remove the 48.74. I'm going to just duplicate this line here to mark the high that we did have October 6th at 48.87. So that's quite an important level, as is the low of that entire range, 47.40. So I'd watch those as important resistance to monitor. As for support, again, support on the chart, okay, the one we have nearby here is the September 29th price low. After that, I would monitor the low from September 22nd. So this is giving you some short-term levels to monitor to see if we do get the unfolding of a price low here before yields rise again, or if they come into this forecast magnet but then still continue to chop lower. All right, well, like I said, it's interesting times out there, and if you'd like to stay apprised of my updates, and if you haven't already, please go ahead and punch that subscribe button. If you appreciated this video and the market insights it gave you, please hit the like button, and I'll catch you next time.